Hi everyone, welcome to my channel. This is Zita Latham, Senior Mortgage Broker and Protection Advisor. Today I am going to talk about everything remortgage related. So the topic is remortgaging, what is remortgaging and why it's so important to be organized and plan ahead. So enjoy. Right, so what is remortgaging? Remortgaging is when your current deal is ending, and if you don't do anything, you just automatically roll on a so-called standard variable rate the bank offers. The standard variable rate is different at different banks. Generally speaking, it's higher when the base rate is higher. Generally speaking, the banks are keeping their standard variable rate higher as well. So for example, if you haven't done anything and you let your mortgage roll into that standard variable rate and you were on a fixed rate, first thing will change is you are not anymore have the stability, because the standard variable rate is a fluctuating rate, can change at any time. But also often a standard variable rate is higher than your fixed rate. It depends, not always, generally speaking, but generally speaking it can be. So it's really, really important that you don't leave your remortgaging last minute. You are prepared, you're organized. I suggest minimum 6 months ahead to speak to your broker, maybe 7 months, and then you can just work out the strategy, book an appointment in, and then you can start the process 6 months prior to the rate expiring. Why 6 months? 6 months because lenders normally give that mortgage off for 6 months, so you can reserve a rate in advance, which is reserved and waiting for you to complete within the 6 months period. So, for example, when the market is really volatile, when rates are going up, when the market is really unpredictable, it's much better to reserve that rate 6 months ahead, the best possible rate available to you at the time, and then if rates come down in the coming months, your broker will be able to change that for you with the bank who offered you the initial original rate. So there is option to reduce it further if the bank reduced it. However, if the rates went up, you secured a lower rate well in advance. So it's so important that you are thinking ahead and having the conversations about your remortgage with the broker well in advance. Now, the remortgage could mean that you end up going to a different bank. So if your mortgage is now today with, let's say, with Barclays, the broker has the ability and resources to check whether today Barclays is still the best for you and therefore best to remortgage again with Barclays, or whether there are better options out there than Barclays. So maybe NatWest offer a much better deal based on your preferences, and therefore it's better to remortgage to NatWest. So the good thing is that the broker can identify that for you. The remortgage is also a really good opportunity to review the whole of the mortgage. It's not just about the rate, it's also about your mortgage term. The mortgage term needs to be reviewed continuously. Every time when it's remortgaged, that mortgage term should be reviewed. Why? Because the mortgage term, the longer the mortgage term, the more interest you pay. The more interest you pay, that will be costing you so much more. It could be tens of thousands of pounds of interest, and sometimes unnecessarily someone is a longer term because they can actually pay the mortgage, or they could pay that mortgage based on a shorter term as well. So the remortgage is a really good opportunity to review this with your broker and see whether a shorter term would be better for you. And you might, if rates come down, you obviously you could potentially reduce the monthly payments, but why would you? If you're already paying those monthly payments, you can, and at best course of action is actually rather reduce that mortgage term a few years, so you can save money on the actual interest. Also, remortgage is a very good time to have a look at what products suit you the best at the time, because everything is changing, your circumstances, your preferences, your plans, the market, and therefore you might have had a 5-year fix previously, but this time around potentially a 2-year fix is better. But again, based on a in-depth conversation with the broker who can actually ask the right questions and determine what your priorities are, what your circumstances are, can actually recommend you the best possible product as well. Remortgage is also a very good opportunity to move home, because it's always slightly tricky to move home. You can, because most lenders will give you the porting option and take the mortgage with you without penalties to the new home. It's not out of question that you can do that while you are still tied in, but it's much better to actually move home, borrow more when it's time to remortgage. The reason why, because then again the pool of lenders will open up, and it is much more straightforward to do this extra, to have some extra other little plans to be executed and added to the mortgage while you're remortgaging. Finally, protection reviews, really important. Insurances needs to be also reviewed time to time. We all change, our circumstances change, so insurances you took out 10 years ago might not be sufficient anymore. You might need to top up, you might need to change something about them, and again you can get the advice regarding that, and the remortgage is always a good time to have a look at the insurances as well. So in a nutshell, be aware, 6 months is the magic number, but I would say probably 7, because then with that extra 1 month you can have an initial conversation with the broker, plan ahead, put the date into the diary when you can actually meet up, have a fact find and start the ball rolling. Try to tie in your big plans with the remortgage, so whether it's house move or additional borrowing, for example, and just remember this is a good time to reflect and get that right advice in terms of your mortgage term, product type and so on, because this is a new mortgage and perhaps different market conditions. In today's world, when rates are slightly higher at the moment, obviously it's really important that you plan ahead with your budgeting as well. I always encourage my clients, it's always part of our work together to complete the budget planner. It's really important to review where those expenses are, where you can cut back if your mortgage payments potentially would go up. So of course it's all part of that advice level of service. So hopefully this is lots of useful information for you if you already have a mortgage, and if your remortgaging is coming up in the next 6 months, 1 year even, you're probably interested, what will happen because you only have only a year left on your current deal. Then be prepared a few more months and get in touch with a broker to start the preparations for your remortgage. Thank you so much for listening, and don't forget to hit the subscribe button, because there's so much I can tell you about mortgages and house buying and the rest, so don't miss any of these videos.